Good afternoon again. My name is Carolin. I'm another lawyer here in Hamburg, just like Christian before. Just working for another firm. And I have a great panel here that Nicholas and his team put together for us. And maybe I just introduce you while you get something to drink. To my left, I have Christian. Christian is working with BlackRock and has been working with BlackRock for a number of years. Is that right?
7 years.
7.
Yeah.
We have Nils. Nils is working with the Harren Group, SRL, as representing more or less the owners side on the investors panel. We have Constantin of MPC Capital. I think he should be known as well to the group here in Hamburg. And we have Wessel of Oldendorff Overseas Investments. And yes, this morning it was mentioned that this is going to be a red day, or that this was a red day. This is pink. Just that everyone realizes, please. And we had last night at the speakers' reception at Watson Farley's, the question was raised, how long will the party in shipping go on? This morning someone mentioned it could be for another 10 years. The ship finance panel was rather hesitant on that, I would say, but John, you were cited a while ago, 3 weeks ago or so, to have said this is definitely not the right time to invest. So, as we're talking about the investor's perspective, can you please enlighten us a little?
Yeah, I'm proud. I've never been cited before, but I think one thing the message needs to be refined in that sense that we are classic asset investors. Asset appreciation is part of our investment thesis, and from that perspective, no, it's in my view not the right time to invest. I think from a risk-return perspective, it is everything else than a good time to invest. I think the values of the tonnage is prohibitive. And on top of it, we currently see the market going down than anywhere else. That's true for containers, that's true for tankers, that's true for bulkers. So ultimately, we remain positive in the long run for the industry, but 2025 and maybe even 26, we have a rather moderate outlook, which will be ultimately good for us because we basically sold most of our vessels so we can reinvest.
Okay, so if you're saying 25, 26, are you then looking at a time to invest in 27, so telling us that you would you would expect a market downturn in 27?
Well, listen, I would be lying if I know what the market's going to look like in 27. So 25, we believe the market's going to not develop too positively across most of the segments.
Okay, but if it was said before this morning that a good investor is a realist who is, if I was not mistaken, buying from a pessimist and selling to an optimist.
Sounds
Would you
about
characterize
right.
yourself as a realist or rather pessimist?
Well, a realist, I guess.
Okay, thank you. Christian, you told me that you had been invested for quite a while into Gadow.
Correct. Yeah.
An LNG related company, but that you just got rid of that investment a few weeks ago. So
we did.
What drove that decision? What was the background for that?
Well, first of all, thanks for the invite and the opportunity to speak. So perhaps just to start with a bit of background to the fund and our strategy, because that would also explain the decision that we took in relation to Gadow. So just briefly, I sit in a part of BlackRock that invests into the infrastructure space. So we invest into companies or assets in the broader infrastructure space. be that energy, transportation, logistics, and also digital infrastructure. And we don't invest in listed stocks, we invest in privately owned companies, privately owned businesses. And often we do that in joint venture together with corporates, families, essentially strategic partners. As part of our strategy, what we typically do is we take longer term views. We typically aim to hold our investments for up to 10 years, sometimes even a little bit longer. But we do need to exit. We're a closed-ended fund, so we do need to exit at a certain point in time. We can't hold our investments forever. Unlike families or corporates, we can't hold our investments forever. So in the case of the LNG market more broadly and gas stock more specifically, because the market had developed in such a favorable way over the last 2 to 3 years, we saw this as an opportunity to essentially accelerate our returns that we would have otherwise only earned over a longer period of time. So it is part of our strategy to exit. We have to exit. In most cases, we hold investments for a longer period of time, and we earn more of our return through ongoing dividends. But in the case of gas stock, there was an opportunity to crystallize our target returns earlier.
So would you share that view that now it's not the time to invest, or would you just say, no, this was a special situation, we could accelerate returns, but we're still looking into investing today?
It all depends on your strategy and your investment horizon. So if you are an investor that invests at the low point, rides the cycle, and then exits, which is, has been a very, very successful strategy, of course, in the world of shipping, that is then probably doesn't make sense. If you are a very long-term investor,
yes. You said you were looking at 10 years.
Correct, exactly. So if you're a very long-term investor and you can take a through-the-cycle view, and you believe in the specific case of LNG, in the long-term macro, and also the ability to leverage a platform such as Gadow to do other things in the, let's call it the broader gas shipping space, and build value over time, this has the potential for being a great investor for the party that we and great investment for the party that we sold to. So it always goes back to this sort of investment philosophy point, and there are different types of investors.
This morning on the energy panel, there was a discussion about the eco-fuel value chain, basically, about terminals, about storages, about transport, about actually getting rid of certain emissions. And so would you think that eco-fuel value chain, or this, let's say, green fuel value chain, would be an investment target that is attractive to BlackRock, and rather since you're financing infrastructure, or your fund is financing infrastructure?
Yes, is the short answer. The sort of key features that we look for in our investments are visibility of cash flow. So I think the issue with a lot of the green infrastructure that is being developed and designed at the moment is that the offtake contracts are not there yet. There is a lot of interest, but to actually have signed offtake agreements, utilization agreements for the infrastructure, it's going to take a bit of time. So in order for a fund like our fund to be interested and to actually commit to an investment, these contracts need to be there. There are other pockets of capital, perhaps not so much in the infrastructure space, but higher risk, high return pools of capital that can take more of a development approach and can take development risk. For us, that is trickier. We typically tend to come in when the final investment decisions are being made and construction is about to be started, and the large sort of capex requirements need to be funded. So yes, we're very interested in the value chain. We do think there certainly is a future for CO2, for ammonia, for methanol, etc. But it is still quite early for the type of investor that we are.
Okay, so we are back to the chicken and egg problem, because Nils, as an owner, would certainly always say, well, I'm not investing into ships that need a certain infrastructure if the infrastructure isn't there. I would assume. But Nils, if you look at the owner's perspective, and we just learned at the ship finance panel that these days, since owners are in a pretty nice situation to say, owners have sort of become investors as well. You've been looking at some greener vessels, I would say, the Orca class vessels Sören mentioned before as well. So what was driving your investment there? Was it the ESG factor? Was it the demand by clients, by customers? What was driving this?
Maybe one word, more like in general, that when we take investment decisions on vessels, it's like two classes of decisions. One is an opportunistic deal, which might be even pretty short term, which follows the general perception, like, is it a good timing or is it a bad timing? So that's something, but this is not what you're asking about. This is not what the Orca class is about. The other way of looking at investments for us is to really see, and that's going far beyond the asset itself, far beyond the steel, because we are looking at the vessel as a tool to serve our commercial services, to serve our clients. So and that kind of disconnects those decisions even a little bit from the actual market timing, because it's a long-term investment with a totally different purpose, and the purpose is to serve our clients' transportation needs. And that means that those decisions are much more driven by the actual customer need for transportation. It's kind of, in case of the Orca vessels, for example, they have been sort of reverse engineered from the current and expected customer needs. What does the vessel need to look like to be fit for those requirements now and in the next 30 years? So those decisions are totally driven by different aspects than the pure timing. Of course, timing plays a role, of course. You don't want to potentially get the highest point in time, but it's more a strategic decision for the customer service in context of fleet renewal, etc. When it comes to the green side of things, it's a similar approach, because today all potential future fuels are in their infancy, except LNG, if you make that part of that sort of fuel mix. And all of the other fuels are pretty young in their technology status, and also especially in the supply side. So to implement those aspects into those ships is in fact to sort of future-proof them and to be ready for what will come, and do that with a view on what is technologically wise possible and prudent to do today, and makes sense from a pure investment point of view as well. Of course, the numbers have to make sense commercially. Those investment decisions need to make sense, but it's not kind of a pure green thing. It's about being future-proof, and it's also about being ready for what we believe will come.
Constantin, you mentioned a while ago you were looking at other asset classes. Now, yesterday, I think you announced that you are investing into hydrogen-ready vessels. Is that correct?
Well, not really.
Not really. Okay. Okay. Then
it's some things get written and some things are true, but I'm happy to shed some light on this. No, we are looking, and maybe also to take a step back, we are looking at either opportunistic investments, similar to what John mentioned, or to more strategic ones. And strategic means structural growth markets which, not like container, dry bulk, or tankers, are pretty mature, and you have an up and down volatility driven by the underlying macro trends, but rather markets that grow in general. And at least we have a strong view that the offshore wind service market is a structural growth market. For example, the same would apply for the LNG infrastructure or energy infrastructure market, or for the renewable energy market, which is a market where MPC Capital, next to shipping, is also invested. So I think that's the starting point in terms of our view on investment opportunities. And what we have done is we have contracted offshore survey and service vessels, rather smaller, so vessels that are not the ones that are generally acquired over the last couple of years by most of the players that have invested in the space. It's way smaller. It's, I would say, a bit of a niche. We do believe that this is a sector that is extremely attractive because of the high flexibility and the structural growth of the market. And yes, they are, I mean, green, what is green? I mean, they are, I would say, they are able to run on green fuels from the outset and on hydrogen potentially once you carry out additional investments. Okay. So that's where we are. But again, to put it into the context, it's opportunistic investments on the one hand, and there I think John made the point earlier in what is the right time. I personally think if you're opportunistic, you should actually act in any market environment. It depends how you manage and de-risk your residual value risk and maintain the upside. And the upside you can also maintain if you buy at a high price, if you have a good counterparty on the cash flow and can de-risk the investment. So I would not be as cautious on buying in this market as John has mentioned, but certainly I think it's a time where you have to be cautious in taking a decision, but you can still buy also opportunistically, in my view, in this market environment. On the structural growth path for everyone to decide what's a good market. We do believe bunker infrastructure, new fuels, as well as offshore wind is an attractive field.
Okay. John, if you hear that, you remain convinced that you would not invest now in any of these sectors, backing away a little bit from the pure shipping perspective.
I mean, these are completely different sectors to what we're looking at. This is not at all tonnage related. This is our background, this is our heritage, and this is what we know. So I wouldn't disagree on these sectors, with the exception of offshore wind. But nevertheless, I stick to my point. Nonetheless, I wouldn't contradict myself so easily, I think.
No, I just wanted to check whether you. I understand now that you limit this to your segment.
Okay, but I mean, de-risking is a good point. I think risk return for us is important, and what we sometimes in these great times forget how risky our business actually is, and the return has to match that. And even with the de-risking, we still struggle to get an IRR at the current levels of above 15 or 20%, and then we don't do it.
Okay. If we look at what happened overnight, and if we look at what this may have as an effect on, well, pricing of fossil fuel, would any one of you sort of say, well, today is obviously a different day than it was yesterday, but today I may have a different perspective onto investing into the bunker fuel terminal market than I had 2 days ago?
I think it's too early. It's way too early to to have a firm view on that. I'm saying that because ultimately the Trump administration during the campaign was not very specific on what exactly they're going to be doing on the oil and gas side. Mm-hmm. A few sort of slogans, a number of sort of more high-level statements, but what that will actually translate to from a production perspective, from an export perspective, very early days. And then there's also the prospect of increasing trade friction. So putting out all of that together, I think it's very, very hard to have a crystal ball, and we just have to see what's going to happen.
Constantin, have you any?
No, I agree with that, and I think it's super difficult to foresee what that means and what is going to happen, and it's, in my view, too early to take a view there.
From an operator's perspective, from a manager's perspective, what's your view?
The point I made earlier, when we take those investment decisions, they are very long term, and they usually, as we use the ships ourselves, they are usually for the lifespan of a ship. So if we have potentially let's say, maybe there's a delay in new fuels to be kind of supported broadly by this decision overnight, and just as a scenario, does that really affect any decisions that are taken long term? And I would say no, because the direction to decarbonize shipping remains intact, independent of what's happening over the next 4 years or so. It might affect some kind of very short-term decision-making, but in the long term, I think we do need to actually move very quickly, because if we look at the goals for 30, 40, and especially 50, we are already a little bit late overall. I mean, very late, in fact. And if we look at the order book, which is only like 50%, around 50% on dual fuel technology, this might kind of add to the problematic reaching of the goals. But I think overall, it might lead to some delays, but not change our overall decision making.
Okay, thank you. If we look at the development towards more environmentally friendly fuels, about technology, we have been, or probably not you, not me, but industry-wide, there has been quite a bit of moaning going on over the past, decade, that there is not enough innovation that is actually driven by the shipping industry itself. There was a lack of collaboration, that there was a lack of investment, that there was some good ideas around, especially in the field of digitalization, collecting data, but that some of these never succeeded due to lack of capital. Now, if at least 3 of these gentlemen are looking rather at investments, what has kept you, as far as I know, but maybe I'm just not aware of it, from sort of going forward with something like, let's call it a venture capital, and invest in any of these ideas? Have you never been approached? Have you never been asked for, John?
Yes, we have been approached multiple times, but I don't want to go into definitions, but venture capital for me is a group of investors looking for emerging opportunities in large markets. Shipping is neither a large market, nor are we a group of investors, and we are not particularly known to share secrets with each other. So
that's part of the problem, probably. You can elaborate.
No, the problem is it's too small. The market is too small, and I simply think shipping is not a good place for venture capital. What there is development by small companies, by big companies who take views. For example, we do invest a lot in services. We believe one of the most pressing problems are actually the people, but that's nothing to do now with the things you discussed. So no, I don't think it's. I think the shipping market has to wait from developments outside the shipping industry, which are being carried into the shipping industry, and then being taken forward from there. In terms of VC.
Okay, Constantin?
We have also been approached. We have invested into a synthetic fuel startup, but that is more linked to also getting some exposure. Because if you don't invest, you don't get exposure. Then you rather talk about it on parties or on panels without really having a clue, and that's always an issue in my view. But to have a clear venture capital mandate in shipping, I mean, I would say we're not experts in that. I don't see a direct benefit to our business today, and I think a lot of things have not kind of materialized or kind of grown in the way it possibly should have in terms of innovation, etc. But I think it's such a scattered industry. I mean, there is innovation. Look at the Mercer McKinney Center of Zero Carbon. Look at some other centers, but you need big sponsors to provide capital. I don't see that necessarily as a great investment sector for someone like us to invest in any event. But it's probably for others. I think it's for bigger institutions to create platforms that allow collaboration And we are an active member. We have actually seconded a person to the Mercer McKinney Center. I think that is where I see benefit for industry players like us, or also for investors. But I think everything else is at least not for us. There might be other views, but not for us.
As an investment firm, basically, BlackRock
yes.
would probably rather be a sponsor of new ideas and innovation in shipping.
Well, look, I don't have too much to add to what John and Constantin said. I mean, ultimately, our mandate is very much to invest in larger companies with the ability to generate near-term cash flows. So, if someone comes to us with a venture capital idea, they know very quickly that they're knocking on the wrong door.
Okay.
Having said that, yes, BlackRock as an institution more broadly is always interested in finding ways to play a role in the global debate, but we don't necessarily have the pools of capital available to make VC investments. That's a slightly different game.
Mm-hmm. But John, you mentioned that you're investing into people. Can you elaborate a little on that?
Well, many shipping companies basically do that. I mean, that's basically part of what we do. There are obviously our engineers, our superintendents. The average age is now, I think, at above 50. And I think there's a growing concern that there's a lack of qualified technicians on board of our vessels, ultimately implicating the security of our vessels and the security of the industry. So I think it's a good idea to start early there, whatever it may be. For us, it was just looking more on the technical side and building a couple of new companies for that. But that's what every shipping company needs to do.
Okay. No, because you mentioned that before that. That's why I thought. Okay.
Carolin?
Yeah.
Can I make one statement?
Of course.
Because I for some reason, I was just skipped on this innovation point. And it tells me that maybe we haven't been vocal enough about it. So just two statements here, please. One is, I think to support innovation, it's not necessarily a VC-only approach. Yeah. For example, we do not do that normally. Mm-hmm. But what we do is that we offer we actually do a lot of trials with startups, with young companies that have a product or an idea that we feel will contribute to our success. Mm-hmm. And then it's like a win-win trial. It doesn't always mean that we continue afterwards, but it's really a way to enhance those ideas, or kind of to give them a platform to try. So we do that kind of with a number of the young companies. So that's a way to contribute to innovation as well, to give it a real-life platform and a real-life testing. Mm-hmm. And the second thing is, and that's probably even kind of stronger now, connected also to the Orca vessels we mentioned earlier, that we have a fairly strong engineering team and design team, and then Søren mentioned that like around 80 people globally in this space, and they are very, very innovative. And they have designed those ships not only in terms of the perfect hull shape, etc., but also by kind of taking a very an engineer's paradise approach to really develop those ships, and then we have to kind of scale down on some of those ideas because they commercially didn't kind of fit into the project. But it really led to a vessel that contains a lot of innovation and innovative aspects and approaches